Hey traders, Nick Shaheen here recapping week ending 123, historic week. Historic in the sense where we had the ECB come through with the bazooka that they've been promising for over 2 years. Okay, so the scoreboard on the day, it's down on the Dow about 140 points. That's about 0.8%, but you can tell where the weakness was. Down on the SPX, 0.55%. Nasdaq was green, 0.18%. Small caps were flattish until the end. It was much ado about nothing today after a huge day yesterday when the ECB announced their monumental size QE. And it's an ongoing program. So we expected some fireworks today to follow through, but not so. The pre-open was looking a little bullish. This is the S&P, and then we slid before the pre-open, and then we opened kind of. We wanted to rally, but we couldn't. We kind of range bound on the SPX, S&P, and then we finally, with a couple hours to go, we just broke down completely to the lowest levels of the day. So the candle would look ugly because it closed on the low of the day. Apple, different story, closed up 0.5%, but really it was spiked up. But there was a map for the Apple today. It opened and whooshed straight down and then rocketed straight up to a level from which it fell, resistance. So and then it trickled down and tried to rally, failed again. Trickled down, tried to rally, and wanted to fail at the same point, but this is kind of a cup and handle type of a deal intraday for the active traders, and this exactly would be the target of it, if I eyeball it correctly, from the cup and handle bullish pattern that came to life completely, and then fizzled into some sort of a head and shoulderish action here back to the top where it failed a couple of times. So it had a good day. You know who had a better day? Google. Google had an excellent weekend, the end of week basically, if I can type it correctly. Okay, it's back in favor. But also there's a something to watch for Google as far as trends are concerned. It broke out, and this is where it's at right now, is about where the measured move is from the breakout. So now what, one asks. Earnings are coming. I don't like to take big positions into earnings, but this is where you flip a coin and you say, okay, I guess higher, I guess lower. Why do I say guess? Because the earnings plays are always guessworks, because I'm not guessing if the company is going to do well. They're going to do well, but how will the market react to the company's earnings? That's the guessing part. Okay, small caps, a lot better story today. They were pretty flat, a little down at the end, but they were green within minutes to close. So they tell me that the market, their basket of 2,000 stocks, is not that bad. 140 points down on the Dow is the headline. But the Dow is only a small basket of stocks. This is 2,000 stocks is telling you it's not that bad. The SPX is telling you it's a little worse than the small caps, but not as bad as the Dow. So take it with a grain of salt what happened today. NASDAQ, this is the NQ representing the NASDAQ. I've called 4,300 as a kryptonite level. If you don't know your superheroes, kryptonite is what kills Superman, basically. It weakens Superman. Every time it comes close to 4,300, it weakens. It has busted through it a couple of times recently, right here, but very briefly, and then retreated immediately to it. So this is the level I'm talking about right here. Keep that in mind. Once they break through it, they might slingshot past it. Oil, oh my goodness, low, 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 low. So we had Prince Al Walid come out today and say, never ever will there be $100 oil, and Saudi Arabia is not doing it on purpose, and it's basically supply and demand, all of which is bearish oil. So oil was down 2%. This is crude, almost 2%, 1.8%. You know the surprises today that nobody's talking about is the crash in the 10-year. The 10-year rates is in a free-for-all as far as fall, and one would think today, one would think that somebody would talk about it. It was down over 4%. This is a byproduct of the ECB moves, which in turn rocketed bonds up, so people are piling into bonds, so the rates are falling. So it's not a fake move, but a move that's been triggered by an event, an unplanned event. Even though we knew he was going to do it, we just didn't know how it was going to act, how the markets are going to react to it. All right, so what now? What do we do now? Well, here's one thing I said yesterday. The ECB QE did not change a thing fundamentally. The fundamentals are the same. We are still doing well in the US. We're still struggling in Japan. We're still struggling in Europe. QE was expected out of Europe, and it came, and that's the only change. China is still iffy. Yes, it's delivering number. Yes, they're a little weaker, but who can believe it 100%? Everybody doubts it. So all these are all the same. The only thing that changed is the fact that now the question mark of whether Draghi can deliver or cannot deliver, will he, won't he, is out. That the sellers that were selling based on that fact alone, and there were a lot of them, no longer have that reason to sell. So that instinctively tells you that the market should be a little bit bullish. So does that change and start buying everything inside? Not for me. My thesis has not changed. It's still, I leave room for some upside. I try to short the pops that are unworthy, that are not based on fundamental changes like this. I give it a little room if it's a big pop because it deserves respect. And I also take some longs to hedge my shorts. So I'm balanced portfolio. Every day I've got some profits to book somewhere. And I sell spreads outside of those ranges, and the ranges have been perfect, spot on. If you want to know more about it, join the bunch. All right, so looking at the weekly to see the, I'd like to look at the SPY because then it gives me an idea of volume. Okay, finally, volume. All right, volume was pretty good, not as good as last week. This is 2 years worth of SPY. So let's zoom into 1 year so we can see a little more effective. Okay, so we've gone green, red, green, red, green, and we're breaking out of that little lid right here on decent volume, not as big as the last 2 weeks. So you'd think people would pile in more, right? Still a good green candle. I'm not going to poo-poo over that one. All right, small caps who were happier today than the broader markets. Also green candle, also breaking out of that little lid, so putting in some upside trend, if you can call trend. Weak volume as well. All right, how about the Qs? The Qs had some big movers today. We've had overall, actually, we've had some big moves. Like GoPro had a headline up over 8%. We have Zillow up over 11%, although I didn't check where it closed. We've had all kinds of moves. So also the Qs, which represent the Nasdaq, green candle, maybe another leg up. Are we doing this? I'm not sure. The dip wasn't as deep, so we'll see. This is a flaggish, whatever you want to call it. Is it breaking out? It looks like it is. So what comes next? So the question is it time for new shorts based on a minus quote 140 point day? No, it is not. Is it time to bail out of the longs? Panic? No, it is not. Why were we red today? Much ado about nothing. We had a 2% move up yesterday almost across the board. We should have a washout day somewhere. So the small caps are telling me, a basket of 2,000 stock is telling me, don't panic yet, the market, and let me show you the small caps. The financials are the reddest part of the small caps. The financials had a monumental move yesterday. Let's switch to that. I'll pick the XLF. Look at that candle in the XLF yesterday. Big move. I'll zoom in so you can see it. Okay, 6 months will do. This is a big candle right here. So today's candle was red in the financials, yes, but it still held a lot of the greenery from yesterday. So back to the market watch, which is the financials was the source of weakness here. And if you want to see it evident, here's the Dow. You get a handful of stocks that are really red that skew the picture on the Dow, right? So the financials right here are also red. And if you look at the Nasdaq, you got S-Bucks, Starbucks had a fantastic day. You got two major red ones that are kind of like dropping. They offset each other. Priceline is a surprise of the week. Why is it weak? It's down 1% today. It depends a lot on Europe. It should be happy now. I don't know why it's not happy. So that's a question to be asked for the Priceline longs. Financials, look how red they are. Without the financials, the S&P would not be as down as it is. We got some major oil companies that are down, but oil is a headline all by itself. So it's not time to run for the hills is what I'm saying. How do you trade this? You stay the course. Trade your thesis, sell some spreads outside of the ranges, and see if you can scalp some money there. Not a time to panic.